The correlation between the price of oil and the Canadian dollar versus the US dollar has been consistent and predictable for decades. The simple reason is that Canada exports a lot of oil to the US, and the higher the price of oil, the more Canadian dollars need to be bought to finance that purchase. Now, Canada is the fifth leading oil producing nation in the world, and of those exports, 99% of them go to the US. However, something appears to have changed in the last month as crude prices have shot higher on geopolitical concerns and the Canadian dollar has moved lower at the same time. Most traders and economists would cite the situation in Russia as pushing global money into the perceived safety of the US dollar at the expense of other currencies, while at the same time pushing oil prices higher. Others may argue that some social unrest in Canada could potentially have a negative economic effect and deter foreign investment. Or perhaps it's the anticipation that the US central bank may be more serious regarding raising rates to address inflation. Now, whatever the reason, the decoupling of oil and the loonie began in earnest on January 26th, and it appears to be accelerating. Now, if a trader believes that the current situation will intensify and that the Canadian dollar could move lower still, an example of expressing that thesis would be to sell the CME Group Micro March Canadian dollar contract at 0.7793, its current level, and target the 2019 congestion area at 0.7600. Now, stop for this trade could be placed at 0.7900. This trade could make $193 if your target is reached and risk $107 if you're stopped out of your level. Now, if a trader believes that the current fundamental forces could resolve themselves quickly and that the Canadian dollar could rally off these levels, they could express that thesis by buying the CME Group Micro March Canadian dollar at 0.7793 and target the January highs at 0.8023. Now, stop for this trade could be placed below December lows at 0.7700. This trade could make $230 if your target is reached and risks $93 if you're stopped out at your level.